Gold dips below 1,200 for the first time this year. Helping us to make sense of it all is iiTrader's Bill Baruch. Bill, thanks for joining us on this very crazy Friday.
Well, thanks for having me today.
Bill, what is happening on the gold front this Friday?
2 words: King Dollar. This is something that we've been talking about here at iiTrader really, for all year long, but even going further back since gold is really starting to break down. What's coming is the FOMC. The U.S. is lifting their foot off of the easing pedal, and what you're seeing is other central banks like Europe are just beginning and are maybe more than 3 years behind us. This is the dollar moving higher, the highest level since June of 2010, and gold that we're looking at is priced in dollars, and that's going to weigh on the market.
And it's really also this better than expected jobs report, Bill.
Well, though we've had some slow manufacturing and housing data for the last 2 weeks, this jobs report, it really beats expectations, revisions up from the last couple months. And that brings me to another point. The jobs report last month, the market tried to get above it was September 5th. The market tried to get above the previous day's highs, and it couldn't even do that upon a just horrendous jobs report. It just showed that no one believed or really wanted to put merit into the fact that job growth was that slow. And it was revised higher. We came back with a strong number, and the reality is we've been above 200,000 jobs created really for more than a year now per month. And this is going to weigh on gold, and that was the fact that gold couldn't muster up any strength following last month's job report, and then we find it lower. Just shows that the buyers aren't stepping in. They're looking for price action below 1,200, and yes, it's stuck against 1,204.5 where the market opened this year at, but now we're below 1,200, and we're looking at those previous lows. Downside, potentially, we could see something like 1154 in the short term.
So, Bill, you said we could even go down to 1154. So have you readjusted your levels now?
Yeah, I think right now we're going to start to see the downside slow in gold ahead of the FOMC meeting October 29th. We get through this piece of information today with jobs, and then it's what's next, and that's what's next, and that's what really the focus is going to be. There's obviously downward momentum. Path of least resistance is lower. You're going to start seeing some buyers step in at last year's level. Producers, below 1,200, you start getting the buying. But again, this is dollar related, right. and you got to take a look at what moves the dollar, and if people aren't really buying into the fact that the U.S. dollar is this strong, that's perfectly fine. What you have to buy into is the trading partners of the U.S. And we look at Europe, and they're just starting an easing program that puts them potentially 3 years behind us. And on top of that, their data points have just been awful. And on top of that as well, the euro, the average price since inception is 122. We haven't even reached that yet. So there's a lot of potential to see this euro move a couple pennies lower, bring more support to dollar, and thus more pressure on gold.
Bill, before I let you go ahead, one viewer write in asking whether the Diwali festival, which is set to begin in India, could bring in support here for gold.
Yes, of course. I think that's where some of the buying is going to step in here. As I said, they're on holiday today, so you have this low price action now. I think they're going to come in, see the market against this, 1180 or approaching 1180, and that's going to be last year's lows. That's going to bring some support. It's going to bring buying, and I think we're going to find the buying come in there between there and 1154. You got to think about a lot of people buying, and there's in trading as well. There's stops below 1180, and I think Mr. Market has got to find those and search for those stops. So that's why I like 1154. Though yes, I think India buyers are going to be stepping in, and that's going to help the market consolidate off of these lows ahead of the Fed. And then again, in a couple weeks, it's going to be all eyes on the Fed and Janet Yellen.
Bill, thanks for helping us make sense of the move today. Have a great weekend.
You're welcome. You too.
And thanks for watching Kitco News. We'll have more for you. Email us at newsfeedback@kitco.com. Thanks for watching.